What's up, everyone? Lord MC here, and welcome back to Track the Harmonic. In today's episode, we're going to be taking a closer look at the sudden drop in the market and trying to figure out what the heck just happened today. We'll be using Harmonic technical analysis to take a closer look at some of the most popular tickers, including SPY, the triple Qs, the Diamonds, Apple, Microsoft, Tesla, Google, NVDA, and finally the VIX. But before I get into that, I want to preface by saying I am not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice. So question everything, do your own research, and come out with your own conclusions. So having said that, let's jump right into it. Just want to quickly say, with this sudden move that we got today, what could this possibly mean moving on forward in the market? As many of you guys know, my video is all about harmonic patterns, harmonic strategy, and I do believe harmonic technical analysis excels at these points. So by looking at specific price patterns and Fibonacci ratios, we can identify, and I'll repeat this, potentially identify reversal points in the market. And right now, the patterns are for the most part on the macro one-day chart showing bullish harmonic patterns, but doing their type 2 reactions. So in harmonics, like I said before, there's two types of reactions, type 1 and type 2 reactions. So for the most part, other tickers are having bullish patterns right now that are possibly doing their type 2 reactions, with the exception of SPY here, which has a bearish shark pattern, and it's attempting possibly a type 1 reaction back again at 379.06, but we'll get into that. But before that, I want to mention that it's important to note that harmonic patterns are not 100% accurate and should only be used in conjunction with other forms of technical analysis. One of the most important things to keep in mind when using harmonic patterns is that it's important to pay attention, and I keep saying this, to first pay attention to the overall market trend. What does the market tell you? Is the market bullish or is the market bearish? Right? Don't rely on just a single pattern. Don't rely on just a single indicator. Look at what the overall market is telling you. Additionally, it's very important to use proper risk management techniques, such as setting stop losses and taking profits at predetermined levels. And I believe harmonic technical analysis excels at that, at showing where those targets, those potential stop losses are, and as well as the potential profit targets. So having said that, let's jump right into the SPY. The S&P 500 was on a steady uptrend since Friday, January the 6th, and it was attempting to break its descending broadening wedge. If I bring my drawings here, I'll bring them up shortly. But the sharp drop today had many traders scratching their heads saying, what the hell just happened today? Part of the reason because the SPY did fall this much was because of the Department of Justice announcement seizing or taking down BitSlotto, the crypto exchange. So if I bring over here my drawings, let me clear this first and explain here this bearish shark pattern. So the bearish shark pattern here, Alpha SPY here did fall support on the 50 EMA here, the 50 SMA, which is 391.43. If I bring out my drawings, know that the 390 level, this range right here, 390.19 is the last level of support before you come down, test 383.90. You did enter the gap here, SPY has from back in January the 10th. You did enter it here. You have yet to fill it, so we'll keep an eye out on futures market and tomorrow open to see if this finishes that gap. So what can we expect moving forward? This push down here was a solid push with volume. Volume did increase here, almost 100 million volume compared to previous days. So this push was warranted down with confirmation with volume pushing down. So if you do fill the 390.19 level, in my opinion, which is coincidentally where the 21 EMA is here, the last level of support I have, in my opinion, here is that 50 EMA here at around 389 and change. Should you lose at 389 and change, you may possibly come back down to 383.90, where it likes to trade between 383.90 and 381.70 before coming down to test target 1 at 379. In my opinion, if you lose 379 and come back to 371, you're more than likely going to attempt to touch these October lows and completing that type 1 reaction at 355.17. You have an HSI arrow that triggered today off of increased volume to the sell side, where HSI was oversold. AMP RSI came down as well. RSI was not oversold, but you are coming back down. It's going to be interesting to see if the HSI is going to cross that midline. If it crosses that midline, in my opinion, you may be attempting to hit that that target one reaction here at target one at 379.06. You definitely want to have the last level of support. You do not want to lose, in my opinion, that 389. So if you come down to test 389, you want to bounce back up above 389, get above 390.19. And the most bullish case scenario, come back, test 393.84, break that, and then 396.13 would be very bullish if it comes back up in that range. Something I wanted to share here, that every time of this ascending broadening wedge, you had one touch point, two touch point, 3, 4, and then the fifth, right? The last time that touch point broke out of the descending broadening wedge, you touched this 2009 trend line. This 2009 trend line was the crash, the crash lows, and you did break up above that shortly, but you came down pretty hard back down, all the way down to the 200 EMA here. So SPY did have a similar setup here. It did not have the trend line, touch the trend line, the 2000 trend line, but it did break out on Tuesday at the descending broadening wedge, and today it did break out, went as high as $400, but unfortunately you got met with solid selling pressure. And quickly if I jump over to the 5-minute here, the buyers never stepped up. Where were the buyers today? You had a potential right here, buyers stepping up here towards the middle of the day, but failed and continued pushing down. Pre-market right now, you're looking like you're going to fill that gap. After hours, you're going to fill that gap. So we'll definitely have to keep an eye on what futures does at open. But jumping back to the 1 day here. So off of this touch point where you did break out of the descending broadening wedge, you look like you may be coming down here again. If this history repeats itself, you can start that leg down again, back up to that possible target 2 at 355, but we will keep an eye out on that. Jumping over to the triple Qs. So the triple Qs also had a negative 1.3% day for loss for the day, went as high as 284.69 before closing the day at 277.88. Like I said earlier, most of these other tickers have bullish patterns. In this case, the triple Qs has a bullish butterfly pattern where it tried to come up here and attempt to do its type 1 reaction here at target 1 at 289. Coincidentally, that's where also this top of the descending broadening wedge. But today you got met with an HSI arrow triggered to the sell side here. AMP RSI was oversold. HSI was oversold. AMP RSI was approaching oversold territory here. But what can we expect with the triple Qs, which I think is very important to look at the indices right now, because I have a level here of support at 276.85, which if it loses that, the next level of support here would be where the 21 and the 13 EMA is around 274. If you lose that, you come down to XA around 265. And in my opinion, capitulation would start with the triple Qs at 260.14. Should you come down, you possibly test. If you lose 260.14, you're more than likely going to test the October lows here at 254.26. Finish that gap, hit that hop level here at 256 and continue going to the downside. So we will keep an eye out on that. Right now, you definitely, if you're going long, you definitely, for the NASDAQ, you definitely want to find support here and not lose 276.85. If you bounce off of this level, maybe you attempt here at 289.07. And for the most bullish case scenario, you break up above 293, test the 200 EMA at 295, and then possibly finish that target 2 here at 306 where this gap fill is. But too early to tell here. Who knows if this is going to continue. As I mentioned before, this looks wonky, but this looks like a wonky left head and shoulders, right? You have the left shoulder here, the head, and then possible the right shoulder forming, where the neckline would be somewhere where that 260.14 trend line is at. So we'll keep an eye out on that. Jumping over to the Dow Jones. The Dow Jones had a negative 1.83% for the day. It went as high as 340 before closing the day at 332.97. So HSI arrow was triggered on Tuesday with the increase in volume selling. There's selling pressure that came up today, the past 2 days. So it did bounce off of support here at the 50 EMA. The 50 EMA is around 332 and change. Should you lose that 50 EMA here, you're more than likely going to test the 200 SMA, where coincidentally is that target 2 at 322.62 off of this bullish butterfly pattern. Out of the three indices, the Dow Jones has been the most bullish, breaking out of its descending broadening wedge, but finding levels of resistance here at 345 and change. So if it comes down, it looks like I guess this was a double top, so triple top. It looks like an M formation right now, right? So the next line would be somewhere around where the target 2 area is. You lose that, you could potentially come back down. Last level of support would be 332. Come back to target 1 to do a type 2 reaction, back down to possibly hop, XA and then hop, right? You do have a gap here around 311 and change. So very key levels here off of the Dow Jones here. So if you lose the 200 EMA, or the 200 SMA, you can come back down to possibly do the type 2 reaction at target 1. So HSI is approaching the midline here to see if that crosses over. If that crosses over, in my opinion, you maybe test target 2 here first and find support. If not, you definitely don't want to lose target 2 here as support. You want to bounce off the 50 EMA here, come back above the 9 EMA at 337, and potentially see 342, and then break 345 for the most bullish case scenario to test 357 and possibly fill that gap at 360. Too early to tell for that, but we will keep an eye on that. Jumping over to Apple here. So Apple saw a small decline today compared to what the market was doing, right? It finished negative 0.54% for the day. It went as high as 138.61 before closing the day at 135.03. So if I remove my drawings here, there is a bullish bat pattern on Apple right now. You found resistance just slightly above the 50 EMA, where you're looking like you're going to attempt here XA at 134.41. If I bring my drawings here, know that 134.37, in my opinion, is a very key critical level for Apple to lose. As you could tell from previous setups here, 134.37 was support. You bounce back up several times here, but the last time you broke down from it was back in December the 19th, where you came down and you had 52-week lows all the way down to 124. So you broke up above it. You tested this 137 range, you failed, and now you're more than likely going to possibly test that 134 range again. Should you lose that and then you lose the 13 EMA here around 132, you're more than likely going to test the 52-week lows and maybe touch hop here at 122.40. In my opinion, capitulation has yet to happen for Apple compared to what other tickers have done. Now, that doesn't mean that Apple has to do the same thing, but Apple, in my opinion, capitulation starts here at that 121.95, where there's a gap fill around that 120 range. So we will definitely keep an eye out on that. If you want to be long on Apple, you definitely want to find support here at that 134 level. You want to hold this level here. Otherwise, further downside can be coming for Apple. You bounce off of 134 for the most bullish case scenario, get back up at 137, and then 140 to possibly test target 1 at 147, where the 200 EMA is, and on and so forth. But too early to tell. We will keep an eye out on that. Jumping over to Microsoft here. So Microsoft has this ABCD pattern here. It finished the day negative 1.89%, almost a 2% day loss here. Went as high as 242.38 and finished the day at 235.81. So you have an HSI arrow triggered to the downside here with volume matching yesterday's volume. So there is a key critical level here for Microsoft to break up above, and that is at 242.50, which you kind of got rejected off of today. As you can tell from previous setups here, once you break that 242.50, you kind of go pretty crazy above 248, 250, and 260. So it has yet to break up above that for quite some time now, and it found resistance there. It found support at the 9 EMA here around 235. Should you lose that, you come down and test $230.65, where in my opinion, if you lose that, you come down to 219 and then possibly hop at 210 to test the November lows here for Microsoft. So you definitely don't want to lose 230 as the last point of support here for Microsoft, in my opinion. For the bullish case scenario, you definitely want to break up above the 50 EMA here at 239, 240, break 242, you can see possibly 248, and then down the line at 256.12. Jumping over to Tesla. Move my drawings here. Tesla had a negative 2.06% drop for the day. It went as high as 136 before closing the day at 128.78. You did have solid selling pressure here with volume increasing. You were approaching as the HSI here overbought. But let's jump over to the 3-day here. So the 3-day here has a level of support here at 127.88, and you're currently just below that. So if you fail to climb above 127.88 for Tesla, it could get dangerously close back up to these levels of supports now that I have. Now at 113, you do have a gap that never filled here around 114. So capitulation again starts at 113.12 here if you lose that on Tesla. So definitely want to come back and find support here at 123. Should you lose 123, you're more than likely gonna attempt that gap fill and then test at 113. 113, you lose that, you could see possibly test the January lows and then maybe $92 down the line. There's a lot of things going on with Tesla right now. So one thing to note that Tesla does have earnings, as well as Microsoft, I forgot to mention, has earnings next week. So not a lot of people are happy about earnings. They're kind of bearish on earnings, that they're going to, most of the tickers are going to be reporting bad earnings, but we will have to keep an eye out on that. Jumping over to Google here. So Google did react kind of positively compared to other tickers, with only losing negative 0.19% for the day. Went as high as 92.80 for finishing the day at 91.12. You did have an HSI arrow triggered on Tuesday off of HSI being overbought. You did find support here off the 21 EMA. So if you lose a 21 EMA here off of this bullish decrab, you more than likely come test hop, fill that gap, because it has yet to fill this gap here around 82. So if you lose that area here, the 21 EMA, you could possibly test hop, fill that gap around $82 and change, and then come back down to 79.06 to create lower lows. So very tight range here for Google here. If you're going long, you definitely want to break up of 92.72. You break that above the 50 EMA, $100 would be the next target on Google. Jumping over to NVDA. So NVIDIA had a negative 1.84% drop for the day, went as high as 178.73 for closing the day at 173.77. So what can we expect here for NVIDIA? NVIDIA did close. NVIDIA and a bunch of the other the chip takers are kind of strong compared to a lot of the takers right now, holding up above their 200 EMA. So let's jump over to the 2-day. 2-day? Oh, this is 3-day. So off the 2-day here, you are finding support off the 200 EMA. The next level, should it hold this, you could look at 197.79, right? You are approaching overbought territory here off HSI and AMP RSI. So definitely want to keep have NVIDIA stay above the 200 EMA. You could tell here off of this, because this has yet to do its type 1 reaction. It's overextended as 30 bars off of this bullish bat pattern, but you can still look at these previous levels here. So you definitely want to break up of 197. You break 197, there's gaps up here at 230. Target 1 would be 245 and then 283 down the line. So you definitely want to hold a 200 EMA. You lose a 200 EMA, you have a bunch of support here between 163 and 155. Should you come down here, the next level of support would be 143 and then 134. 134 would be capitulation again, where you can come back down again. This could set up a double top as well. Too early to tell, but who knows? This push up back again. If you lose 134.64, you come down to 107.64, which is October lows, but we will keep an eye out on that. Lastly, to cover here is the VIX. I mentioned in my previous video over the weekend that the VIX here was at around 18 and change, $18.01 during this time here, and that it could potentially have hit $17.39 at hop, but did mention that at any given moment this could reverse quickly and push up, and the past 2 days and just most recently today, it went as high as $20.58. So there's definitely volatility picking up here. HSI, it's kind of hard to do technical analysis on the VIX, but if we were to entertain that, the HSI is approaching that midline here. Should it decide to break up above that, that next level would be 2120 and 2168. At any given moment, VIX could just take off. So definitely we'll keep an eye on that. Remember that historically speaking, anything below 19 is considered a bull market. And even though we hit $18 here back in Friday, it did not feel, in my opinion, like we were in a bull market. And right now we're back up above 20, so we'll keep an eye on that to see if that keeps increasing. So if fear keeps increasing. So having said that, that is all I have for you guys. I will be streaming tomorrow, same time as always, 15 minutes before open. So if you want to follow me on that, the link to my Twitch in the description below. So if you like this type of content, guys, please consider giving me a like, subscribing to the channel. It does help me out. But other than that, that's all I have for you guys. So take it easy, and I will see you guys tomorrow. Peace.